The UK's financial gamble, how London became a casino for the global elite and lost. A couple of months ago, UK Prime Minister Keir Starmer signed an agreement that officially begins the process of handing over the British Indian Ocean Territory to the Republic of Mauritius. Now, if you're not already familiar with this tiny speck on the map, you're not alone. The place has no permanent population, just a few rotating naval crews, and it only stretches across 21 square miles at low tide. In practical terms, this transfer means almost nothing, no big economic loss, no huge geopolitical shift. But symbolically, it carries weight. Once the courts approve the handover, the sun will, for about 120 days next year, officially set on the remnants of the British Empire. That poetic ending isn't shocking for anyone watching the UK's steady slide over the years. 20 years ago, the UK was still seen as a top-tier economy with solid global influence. But fast forward to today, and the country seems paralyzed. It's grappling with the predictable fallout from familiar culprits, the breakdown of its old imperial trade model, an overdependence on financial services, a London-centric economy, unsustainable housing prices, staggering inequality, privatized essentials, unchecked corporate mergers, a continuous brain drain, and a political class hooked on ideas that no longer fit today's world. It's not that these issues are exclusive to Britain. Plenty of countries are dealing with the same structural flaws. But the UK looked at what others were doing and said, let's go all in. And so here we are. London, once the crown jewel of the empire, is still glittering, at least on the surface. The capital and its surrounding areas continue to rake in wealth. Its GDP per capita is among the highest globally, rivaling entire countries like Switzerland in both population and total output. In fact, if you were to peel London away from the rest of the UK and treat it as its own economy, it would be growing faster than most wealthy nations. But here's where things start to look hollow. Unlike New York, which has built its financial power around backing real companies, technologies, and innovations, London's financial sector thrives on something far more abstract, managing the wealth of people who already have more than enough. While Wall Street is where you go to make money, London is where you go once you've already made it. It's not a place for building fortunes. It's for preserving them, often in discreet and highly creative ways. London became the global hub for money in motion, not because of its size or resources, but because of its unique position. Geographically, it sits between Asia and the Americas, making it an ideal time zone for global transactions. Historically, the British pound held global trust, further establishing the city as the go-to location for forex trading. According to the Bank for International Settlements, nearly 40% of global foreign exchange transactions flow through London, a volume that more than doubles the next closest competitor. And it doesn't stop at foreign exchange. London dominates in what's politely termed wealth management, which really means helping ultra-rich individuals shield, shift, and optimize their assets. That might include creating complex tax structures, establishing offshore trusts, or investing in prime real estate to park capital. The UK earned over $160 billion just from financial services in 2023, more than it made from selling vehicles, machinery, fossil fuels, and precious metals combined. What's going on here? Essentially, a small group of well-dressed professionals are providing services to the richest people on Earth, services that range from boring paperwork to some highly questionable financial gymnastics. A Robinhood app could double your money. But if you're a billionaire, London offers the full VIP package: elite legal teams to shield your holdings, posh apartments to store your cash, tax advisors who can make your income vanish on paper, and a welcoming culture that rarely asks uncomfortable questions. A 2017 study from the University of Amsterdam tracked how trillions of dollars are funneled into low-tax and lightly regulated territories. Unsurprisingly, the top destinations were familiar British-linked names: the British Virgin Islands, Bermuda, the Cayman Islands, and others. The common denominator? Most of them are part of the UK's global financial web. To be clear, much of what happens in London is legal, above board, and polished with high-gloss compliance. But peel back the luxury veneer, and even these legitimate services lean heavily on money, with murky origins. Consider Lloyd's of London, not the bank, but the century-old insurance marketplace. It's where brokers create policies for highly unusual and risky assets. Think satellites, deep-sea oil rigs, or sanctioned oil tankers. In many cases, these are transactions that wouldn't fly in New York due to strict oversight. But London? It has historically been a bit more flexible. Now, here's the real problem. This system, one that has increasingly prioritized the needs of the ultra-rich, has become the backbone of the UK's economy. And the price of keeping this machine running has been steep. The rest of the country, especially regions outside London, has paid that price. Public infrastructure has suffered, traditional industries have decayed, and most working-class citizens have seen no benefit from the booming capital. Worse yet, the billionaires the UK bent over backwards to attract are now leaving. People like John Fredriksen, one of the UK's richest residents, have decided to jump ship. He's moving to another country that's even more accommodating.
Why?
Because the UK is finally, timidly beginning to talk about raising taxes on the wealthy. For Fredriksen, this was apparently enough to declare that Britain had gone to hell, just like his homeland Norway, a country, ironically, ranked among the highest in the world for living standards. The media has focused on what this means for the luxury home market. Fredriksen's mansion in Chelsea, comically named the Old Rectory, is now up for sale, possibly the most expensive residential listing in UK history. But the bigger issue is what his departure represents. The UK is now losing millionaires and billionaires faster than China, a country with 13 times the population.
Why?
Because these people never intended to stay. They were drawn by the UK's friendly financial rules and easy living. But the second things got slightly uncomfortable, taxes, transparency, expectations, they bolted. Most of them are now relocating to the UAE, a nation that combines zero income tax with all the financial services they loved in London. It's a new version of an old story. If someone helps you cheat the system, don't expect loyalty in return. This mass exodus raises an important question. Does it even matter if they leave? After all, if they weren't paying their fair share anyway, wouldn't their absence open up opportunities for others? Not exactly. See, these aren't starter homes they're leaving behind. They're multi-million-dollar properties still far beyond the reach of first-time buyers. And the industries that cater to these wealthy residents, real estate agents, lawyers, luxury goods sellers, and yes, finance bros, are now facing a steep decline. Ironically, even the City of London is starting to suffer from the system it helped build. So, what happens next? In theory, this could be the start of something better, a chance to build a more balanced, sustainable economy that doesn't depend on attracting foreign billionaires. But in practice, the UK faces serious obstacles, a huge national debt, rising borrowing costs, and political leaders who are more interested in optics than long-term planning. Fixing this won't be quick or easy. It would require taxing fairly, investing in real industries, decentralizing the economy, and embracing boring but essential reforms. But no one wants to make those hard decisions. The easiest thing has always been to cater to money. The UK chased wealth, and now it's watching that wealth walk away. And as it turns out, building a national economy around appeasing the global elite, instead of serving your own people, is a fool's gamble.